Hi everyone, my name is Smart FX. Welcome to our YouTube channel. Okay, in this video, we're talking about the weekend trade recap. This is actually the continuation of the series, the weekend trade recap series on our YouTube and also on our Instagram page, talking about the trade we took during the week and the strategy behind the trade and what are the probabilities of the trade, because in the forex market is all about probability, is all about the edge and things placed together to make the trade. In one word, it's just all about probability. How sure are you that this thing is going to go your way, and what gives you the confidence, and what is the strategy behind it. When it talks about the strategy, beyond the strategy, there are things that comes together that make up a good trade. It's not just about the strategy alone. You can have a good strategy and not have a good mindset of that trade. You will actually end up a good trade with a lose. So, but for my own part in this video, I'm only talking about the strategy. So I just want you to know that it's not all about the strategy that takes for you to be a profitable trader. Okay, let's get into the charts. We'll be looking at the trade we took on Thursday, that's April 24, and we'll be looking at gold. Is a good trade actually. So, okay, the Telegram is still loading. After, okay, we are looking at the trade I took on this particular day. Let me go to 4 hours because we had to do a top down just to. Okay. So this trade I took on Thursday, gold sell limits. Yeah, let's go to daily chart because I really want us to look at some top down. You can see here, this is daily chart here. You can see this is Thursday traded bullish. Then the question is, how then do we take bearish? Though I was expecting a bullish market because market enter into a daily fair value gap, even though there is a weekly fair value gap below, but market enter into a daily fair value gap. So I was expecting the next day, that's Thursday, to be bullish. But something happens in the market open. Let's go to 4 hours. So on Thursday market, something happens. We have a gap. That's a new day open gap. That's the NDOG. We have a gap here on Thursday. So I was particularly expecting market to come down to close the gap, because every time I see a gap on a new day, I always feel like, oh, market should come down and close the gap, then we can move forward. So that is what I'm expecting market to do at that particular day. That's why I entered the sell. Okay, we have 4 hours, because no, market always do two things. Either market is seeking liquidity or is offering a fair value. So here is actually not a fair value, but here market needs to close a gap, which is called a fair value gap. But this is a new day open gap. So which means it has more there is more liquidity when it comes to market coming down to this place. So market can possibly come and close. So that's what I was particularly expecting the market to do at that particular day. So let's go to 1 hour chart. Okay, this is gold 1 hour chart here. So on gold 1 hour chart, we want to look at, this is Thursday, right? This day we are looking at for. So we want to look at the narrative, if we are able to see the narrative. But what I can see on 1 hour on Thursday is that market wanted to move bullish. Like we see, market started bullish here based on there's a fair value gap here. Yeah, there's also a gap on 1 hour also. So which means that I expect market to come down to the gap or bullish continuation, right? So, but there's a 1 hour fair value gap, and you can see market eject away from the 1 hour fair value gap. And when market get to this particular place, you can see market was weakening these whole zones. So which means that I can possibly say there's a resistance there. There's a resistance there, and 1, 2, 3, 4, 5, 6. That's 6 hours. So I can possibly, when I saw market here, I was like, okay, market is rejecting at this particular zone, then what can it really mean? So that's when I went to 15 minutes, because on 1 hour there is no narrative There's nothing I can see that okay, this is what I'm looking out for. When I talk about narrative is just about where can we see market. Like if market is going to this particular place, then how can market get there? So the PD arrays and my own PD array I use for narrative is just fair value gap. Fair value gap. I don't use any other thing. It's just fair value gap. So which means I'm expecting to see a fair value gap and order flow on a lower time frame that will let me to go to where I want to go. That draw on liquidity. So on 1 hour we did not see anything. We only saw the consolidations, right? Okay, on 15-minute chart here, I'm only looking at this Thursday, right? So I saw market was bullish, market reject from a fair value gap, then going bullish. But do you see something? The moment, let me show this out, right? So you can all see. So the moment market took out the liquidity here and come to a fair value gap, like market break the structure, come to a fair value gap and goes up. Then the moment market breaks this low, I'm expecting a sell. I go to pour a 5-minute chart to look for a fair value gap. Though, yeah, because it was doing this candle that actually in the sell. So yeah, I shouldn't like wait for 15-minute fair value gap to be created. Even though when 15-minute fair value gap was created, market sell from the 15-minute fair value gap, right? But on 5 minutes or so, I saw when market break the structure. That's what gives me the edge, and this is the narrative, and this is also the entry. Because the moment, let me delete this. So the moment market break the low that once traded into the 15-minute fair value gap and reject this fair value gap here is my entry. This is the 15-minute fair value gap. Let me delete this. So this is my entry here. The moment market breaks the low that once traded into a fair value gap, and one thing you can notice here is that this is a New York Q zone open, so which means that we are already in the New York Q zone. So then we can possibly look for our New York Q zone strategy, which is just stop hunt, that's SH plus MSS plus fair value gap. So if we look at this particular place, we have the stop hunt. Market took out the liquidity from the previous high. The market goes all the way down to break a low. You can possibly say this low one. We have a low here. I want to actually zoom in so you can all see it. We have a low here and we also have a low here. So market break the first one with a body. Market break the second one with a body. So this is the one I'm looking out for on 15-minute charts. Looking out for this low, not this. This all was created in the 5-minute chart. So this is the one we are looking out for. So the main market breaks two and create a fair value gap. The fair value gap is the entry, and the fair value gap is the entry. And where are we looking out for? We are looking out for this the new day open gap, the gap. So the fair value gap, we are looking out for the gap here, and this is my entry. So I put my take profit, I put my entry here and my stop loss below this high. Then as usual, I always take 1 to 2. Most time 1 to 2, because I just feel like it is more secured when you take a 1 to 2. Yeah, I'm not justifying the fact that you can't take more than that. Okay, this is the trade here. From 4 hours, I know that market is coming down to this place, to this new open gap, right? I know from 4 hours the market is coming down here, so I can possibly put my take profit here. And but do you know what market did? Market did not get there. You see, market did not get there. If I put 1 to 2, I will have just enjoyed the whole trade, and because it is not every time market is going to do 1 to 5, 1 to 6, 1 to. If it's 1 to 2, I will have taken my take profit from here and enter another trade with the profits I have already secured. That is just how the trade look like. That is the psychology behind my own trading. You understand? And people can be like, okay, why can't you just take the whole stuff and enjoy the trade? Is your trade like now? One thing I said from the beginning of the video is that it is not for you to be a profitable trader. It's not just this the strategy alone. You need the psychology plays a big role when it comes to you being a profitable trader. Okay, let's assume that I put my take profit here, and my take profit is here, right? And this is your trade here. So the main market get to this particular place, you know, you want to be like, oh, from year to year it remain just a little small piece, then you want to wait for market to take your take profit, like to end to eat the whole take profit, because ego is going to come in and everything is going to come in, and you are going to feel more emotional here because you want market to come down. But the main markets keep retracing, and okay, you'll be like, oh, market is just retracing to a fair value gap, then I can possibly just retrace a fair value gap, then just come down, then that's all. But the moment market retrace down here, what it means is that when market get to this place, you are already at 1.5 percent, like ratio. Before, you are already at 5, because when market get to this place, you are already at 5.28%. But the moment you, from 5.28 percentage profit, you get to 1.65 percentage profit, there is something called the psychology will begin to talk, like the emotion. You will expect market to come down to where your profit was before. You know, it only takes a man that has already built himself in this emotional stability for him to remove the trade at this particular point and just take the little profit and be like, oh, I take the little profit and that's fine, next trade. But some people that just begin the trading, they want to hold the trade expecting and hoping that market is going to come down back to where their profit was before, and they will close it. But guess what market did? Market keep going up, and they have a stop loss. But as for a new beginners, you beginners, just take 1 to 2, it's fine, as long as you know what you are doing with the trade. 1 to 2, 1 to 2, 1 to 2, start with 1 to 2, build up your emotional stability, be strong in yourself, trust your edge, trust your strategy, and work on your emotions. I think that's the biggest part of the trading. Work on your emotion. The psychology has a big role to play. The way you think and the way you see the market is going to be what the market is going to offer you back. It's just about your mindset. Everything you see in this trade, some people look at this trade, some people look at this same market here and they saw buy. Yeah, they saw buy from this whole market, and some of them it take profit because they buy the same market I sold, some people bought. So that's how the market look like. It's just your mindset. Market is going to give you what you put in your mind, like everything you think about is what market is going to give to you. And as I always says that we only trade based on our belief. Yeah, so nobody is a master in the market, nobody is master, we only trade based on our belief. What I saw was sell, someone else can see a buy. That doesn't mean that the person is wrong, it just means that the person too, that's if you take 1 to 2 now, take 1 to 2 and somebody saw buy here and somebody took 1 to 2, we all took a trade and we all win. That's just the market. So don't forget to like, share and subscribe. And if you want to join the Telegram channel, link is in the description. Click on the link and join. You are welcome. Yeah, that's just it. And don't forget to share also. Thank you very much. Yeah.